Would you invest in Tesla stock if a certified Tesla bull advised you to do so? Find out why Cathie Wood recommends buying Tesla at the same moment as her. Stay tuned and keep watching. With the present economy, people have been struggling to keep up with the latest trends, especially in making a sound investment. The stock market has been quite unstable as of late. Because of this, investors have often wondered whether to hold on to their current investments or sell them off. In today's video, you'll find out why Cathie Wood suggests buying Tesla stock at the same moment as her. As most of you may well know, Tesla is the leading company for electric vehicles or EVs. Along with most stocks, Tesla stock has been experiencing fluctuations recently. Today, Tesla stock is currently sitting at $716.66, which went up by 0.25%. Although some investors have started to lose faith in Tesla, others remain bullish. Cathie Wood, for one, even encourages investors to invest in Tesla stock along with her. Catherine Duddy Wood, known as simply Cathie Wood, is an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. She is often called the most underrated investor, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Wood is known to provide monthly updates about several things like monetary and economic policies, innovations, and what can be expected in her field of expertise. ARK Investment Management, LLC, or simply ARK Invest, is an American investment management firm founded by Wood that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. In a recent video, Wood explains how investors have the chance to become a millionaire by holding Tesla shares until 2025. When asked about her reasons for setting a $3,000 price target for Tesla by 2025, she said that there are a few key variables, one of which is the market share of the EV market, which is in the low 20s worldwide, as she claimed, and she believes Tesla will be able to achieve that. She added that currently in the US it is around 60% share. Wood shares that they, pertaining to herself and her investment company ARK Invest, believe that Tesla will continue to lead the electric vehicle market, especially if Tesla is the first to be successful in autonomous driving in the United States. She said, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20% to 25% share of the total auto market in 5 years. That's by 2026. Wood was also asked if she was concerned with the news that Elon Musk has been selling Tesla shares. She said that she is not concerned at all and views Musk's move as wanting to exercise his options since there will be tax consequences associated with him managing his wealth. According to her, Musk is doing this to pay for the said tax bills. It was even quite a spectacle when Musk replied to Bernie Sanders' tweet in the latter part of 2021, saying that, "We must demand that the extremely wealthy pay their fair share," to which Musk replied with, "I keep forgetting that you're still alive." Sanders' tweet received 280,000 likes, while Musk's reply garnered 290,000 likes. On a different note, Wood said that, "On the sell side, typically, we are what is called a liquidity provider. By definition, a liquidity provider is a market broker or institution which behaves as a market maker in a chosen asset class. Simply said, liquidity provider is essentially synonymous with market maker. Their function is to facilitate trading in securities and other financial instruments by providing a pool of shares, which they own, so that buyers and sellers can trade easily without having to locate and deal with other individual traders. In other words, they make securities liquid or easily converted to cash." Wood explained, "We are usually selling when, let's say for whatever reason, one of our stocks, even our high conviction stocks, has gone up 20%, 30%, 40% relative to the rest of the stocks in our portfolio. It's just called portfolio management. According to her, if a stock has performed that well relative to the others in the portfolio, take some profits and deploy them into stocks that have been neglected or punished for some reason. That said, a liquidity provider sells when others are excited about buying, and then buys when speculators, hedge funds, or other investors are negative on a stock. Would you be interested to follow Cathie Wood's advice and buy Tesla stock along with her? Share your thoughts by leaving a comment in the comment box below. Tesla is on the battery front of about 3 to 4 years ahead of Lucid and Rivian, Wood claims. Lucid Group Inc. is an American electric vehicle manufacturer, while Rivian Automotive Inc. is an American electric vehicle automaker and automotive technology company. In fact, Wood said that Tesla is ahead of almost anyone else. She said that this is because Tesla became very creative in the battery space, especially when they introduced silicon into anodes and experimented with ultra-capacitors. For these reasons, Wood believes that Tesla is ahead of the game by 3 to 4 years. Even Adam Jonas, the global head of autos and shared mobility research at Morgan Stanley, said that the company was a winner in the electric vehicle EV race. He said that the current landscape for electric vehicles was a race and that Tesla was winning it. Think of the EV race as a marathon, he wrote. Tesla is in the lead at mile number 21, everybody else is at mile 2 or still tying their shoes. Tesla's decision to design its own artificial intelligence chip is what Wood believes to be the real breakthrough. Tesla designed it, and by 2018, the specs were out. Since then, they have been collecting billions and billions of miles of data, although technically it is their robots who have been collecting data for them. What we're really interested in are the corner cases, says Cathie Wood. She said that Tesla's pilot test for full self-driving has just started, and it includes the safest Tesla drivers there are. These drivers had to earn a 98 to 100 score. According to them, it's a dream when it works, and it is terrifying when it does not work. These well-experienced and safe drivers are guiding Tesla and hit a button, and that film or video goes back to Tesla so they can learn from their mistakes. Drivers hit the said button every time there is a miss, whatever that miss is, which is most often stopping because of uncertainty. Wood believes that Tesla will be able to perfect this over time, and that within a year more people will have had an experience in an autonomous vehicle. According to Wood, the total cost of ownership of an electric vehicle is less expensive than that of a gas-powered vehicle, and soon we think within 1 to 2 years, and maybe even sooner with subsidies, the actual sticker price of vehicles, electric and gas. We think electric vehicle prices will drop below gas-powered vehicle prices and continue to drop. Our latest thinking is that by year 2026, the average electric vehicle will cost about $15,000. Wood explained that the reason they believe that there is going to be quite a bit of commoditization is that they believe that autonomous vehicles would be taking off by that time. She added that by then, autonomous vehicles will be run in autonomous taxi networks, so fleets and design are less important, as the main focus is to develop the ability of these cars to get people from point A to point B. In fact, ARK Invest updated Tesla's valuation model with a $4,600 price target in the best-case scenario for Tesla stock in 2026, and up to more than $20,000 by 2030. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. The bull and bear cases, tuned to the 75th and 25th percentile Monte Carlo outcomes respectively, are approximately $5,800 and $2,900 per share. It is important to note that these predictions and assumptions are subject to change depending on the economy, which then affects the market prices and stock prices. Of course, these numbers and data from ARK Invest and ultimately Cathie Wood have been based on their careful consideration and thorough study of the Tesla stock movements, along with recent innovations from Tesla. For more Tesla stock content, visit our channel and enjoy our other videos.